In today's video, I want to talk about the mega backdoor Roth. Now, if it's for any other reason than the fact I get to use the word mega in a video, I'm going with it. But as we come into the end of the year here, this is actually an important topic because a lot of us are reviewing our 401k from this year, but what are our options for next year, okay? So I want to explain this mega backdoor Roth and why it can be really valuable and very impactful for you in your retirement savings. Before we get into the breakdown of the mega backdoor Roth, I want to just sort of break down a simple concept, which is anybody that has income can contribute to an IRA, okay? Now, if you're under the age of 50, the limit is $6,000. If you're over the age of 50, they let you put in, I'll just put here 50 plus, a little bit extra. You can put $7,000 into an IRA in a given year. Now, the reason I mention this is you can make this contribution and then immediately what we call convert it to a Roth IRA. All right, we did a video on Roth IRA, but just a quick refresher. A Roth IRA, the money that you put in has already been taxed, and as it grows, the growth, the principal, and the interest are taken out of the account tax-free. So when you make this conversion here, let's say the $6,000 from here to here, you got to pay a little tax along the way, but then whatever that grows to, we've paid tax on the seed and not on the harvest, right? The bigger amount. Now, I mentioned this concept because I'm going to erase this because we need a little bit more room. But $6,000 or $7,000 if you're 50, you know, it's not that much money, especially if you are over 50 and you need to get your retirement savings sort of beefed up as you head into those, you know, kind of important years before you eventually retire. So let's say you work at a company that has a 401k plan. Typically, the structure looks like this. You've got your paycheck, okay, and that money contributes down into your 401k bucket, okay? Now, the cap on this amount last year, or in 2020, was $19,500. I think my numbers say this year it's going to be 2022 it's going to be $20,500, okay? Now, when that money, assuming you put in the max, goes into your 401k, there's really two silos that it could go into. There's the traditional 401k, I'll just put 401k traditional, and then there's the Roth side of it, okay? Now, you can put it all in the traditional, you could put all of it in the Roth, you could do a combination of the two, okay? But once you get to this point and you filled up this bucket, a lot of people stop there, okay? Now, a lot of companies, including a bunch here in town, Qualcomm and a few others, they offer something over here called an after-tax bucket, okay? After-tax contribution, right? Now, this is where things get interesting, okay? Because we know that you can put in this. You've got the company match. I'm a little off there, but let's just say it's about $5,000, okay? If you're over 50, you can put in another $5,000 as a catch-up. Do I have that number right? 5,000 on the 401k catch-up? Okay, just double check on that. Now, the maximum that you can put in amongst all these next year is going to be 61,000, and I wrote it down here, 61,000. If you're 50 plus, it's going to be 67,500. Now, we'll take this number here and just assume that you're over the age of 50 for the sake of this example. The maximum you can put in between these two buckets is 67,500. If we subtract out what you put here, right, 20,000 plus the match plus the catch-up provision because you're over 50, you've got 30,500 right there. Okay? So that leaves us with $37,000. Now that's my math might be a little off because the matching number can vary a little bit depending on the company. But $37,000 is additional contributions that can come in this after-tax bucket. Now you think, okay, Tim, well, what does it mean from there? Well, it is money that gets taxed before it gets in over here, but the IRS lets you move that money through something called an in-service withdrawal. And here's the beauty of it. You can drop that right into a Roth IRA. So when I started the video, I was talking about how you can make a traditional IRA contribution, convert it to Roth. That's $6,000 or $7,000. But if you use your company plan, you can max out the 401k side of the bucket. And I want to point out, you do need to max this out before you come over here. But there's still another $37,000 of additional contributions you can make, and that might be from earnings, it might be from a bonus that you get. You can move it into this bucket and then drop it down in this tax-free account. Okay, now this money, it's already paid tax on the smaller amount, and if this 37,000. You come back 10 years, let's just say it's doubled. You've got 70,000. That money can come out tax-free. That's a very powerful thing, especially if you stack this scenario up a few years in a row. Now, like any good thing, the IRS is sort of on the back end of the deal on this one. And so Congress is looking at that. They originally, in some of the new legislation that was going to pass, they looked at removing this. It actually survived. So as of now, if you're getting your plan set up for 2022, you might want to consider setting up this, mega backdoor Roth scenario. It allows you to get much more money into this tax-free bucket and can have a massive impact on the amount of money that you'll have to spend in retirement or on other things in the future. Because remember, tax rates are at a certain level now. You're going to be hard-pressed to find anybody out there that thinks tax rates are going to be lower than they are today with the amount of debt that we have out there. But either way, if taxes go up, you'd want to pay tax on this amount now than on this bigger amount later. So that's the mega backdoor Roth. If you have any questions, let us know. And here's to good planning for 2022.